All right, everybody. I hope you're having a great day. All right, the markets have concluded for today. Today being Wednesday. Right now, it is 5 p.m. Indian Standard Time and 3:30 p.m. Dubai Standard Time. A very good evening and a very good afternoon to each and every one of you present over here. I hope the day has been good for everyone. Remember, everyone is going through different phases of life. Everyone is facing different challenges. Everyone is having different tasks. So, but nonetheless, once the market settles, and especially when it's about the third live streaming session, it's more to do with technical analysis, right? Education provided about technical analysis as well as for those people who are aware about hot stocks, right? Hot stocks are trading opportunities that we provide you, right? So, how do we analyze those trading opportunities, hot stocks, which have been already been forecasted? What is the technical analysis behind that? So, we will discuss all these in detail. Another point which I had to mention is that generally I used to give 5 minutes, right, to take a break, not to take a break, but to get ready with your pen, paper, coffee, water, whatever is required. But I have noticed a lot of you people forget you are very interested to join the seminar, the live trading session, but in those 5 minutes a lot of people who enter late into the live streaming session they kind of get confused as to what is happening. There is background sound playing and people are not able to understand like what is happening. So that is the reason I have decided to remove those 5 minutes. All right, we are not going to have any more 5 minutes. So please, guys and girls, men and beautiful women, make sure to be at the time mentioned. All right, you all are aware we have it running, right? We have live streaming sessions all the way from Monday till Friday, with each working day having three live streaming sessions, right? Once in the morning, the other in the afternoon, right around when the market is going to close, and the third happens after the market has closed, which the third mainly focuses on, as you all have mentioned, it's more about technical analysis, right? Education in terms of technical analysis, and all the stocks that we have shared in terms of hot stocks, the technical reason, the reason for concluding to those levels of entry and targets based on technical analysis. All right, so I hope everyone is ready. No more 5 minutes. All right, once we start the session, I want to make sure that everyone is engrossed. You have to be ready before you arrive, right, for this particular live webinar. For any one of you who are still uncertain about what the timings are, so please, my assistants will make sure to let you know all the information. All right, you can get to my assistants and they will provide you with all the required information. So let's get started. Let's quickly have a recap as to what the market has done, how the markets have concluded for today, so on and so forth. But before that, how can I not start by introducing myself for all those beautiful newcomers? This is Harsh. All right, I have been associated with the financial markets for 8 years. All right, 8 years. I have been mainly trading forex, right? Foreign exchange, different forex pairs. I have been trading commodities like gold, oil, silver, and I've been trading the US based indices such as the Dow Jones 30, the S&P 500, the Nasdaq 100, and currently we are also looking at the Indian share market, the Indian indices, as well as the individual stocks. So I hope you all are ready to absorb a lot of information that will be shared today. I can already see Sophia is right here in the chat. I'm very happy, Sophia. You are the one because you make sure that you are present in each and every live streaming session, and that adds confidence to in me, to provide you with better education, with providing you with an energetic mode of education, correct? Education, provided in a very mundane, in a very monotonous manner does not excite or does not interest anyone. But someone who is ready with, uh, who can provide education, but with a hint of fun, with a hint of lively, energetic, enthusiastic behavior. I mean, everyone would love to listen to such a person, right? And I'm trying to inculcate those qualities to make sure that I can keep you entertained as well as keep you hooked on to whatever information is being provided. Sophia is writing, pen and paper are ready. That is correct, Sophia. From now on, moving forward, we will not be giving 5 minutes. All right, no 5 minutes now. People have to be there beforehand. All right, you can prepare yourself 5 minutes in advance. All right, so there is a big mishap that takes place when I start the session and I give 5 minutes, but then for some reason people who join late, they are not able to understand, or they think that either the video is lagging or there is some problem, so people tend to exit from the live streaming session, right? We don't want that. We don't want to create any unwanted hassle. We do not want to create any unwanted inconvenience for you beautiful people out there. So next time, everyone, hello Yi, welcome back, and you're writing and coffee and water, correct? So please make sure you arrive 5 minutes before the live streaming session starts. Be ready with your pen, paper, coffee, water is required. Once the live session starts, it starts. All right. There is no break whatsoever, right? No more 5 minutes. So I hope everyone is ready and is prepared. All right. Because from today, no 5 minutes, or from onwards, right? From today onwards, no more 5 minutes, no more initial 5 minutes. We will dive right into the concept, right into the markets. All right. A quick look at what the Sensex has done and what the Nifty has done. So as you can look, let's start with the bigger brother, as Nifty is the bigger brother. So looking at the Nifty 50, right? The prices had gapped lower. I hope everyone can see my screen. We are just currently focusing on the last amount of information, all right? So please, everyone, pay attention. I know it is the third live streaming session, and many people who are having a very hectic day or have had a tiresome day, you might be feeling a little lazy or a little unmotivated to attend, but don't worry. When Harsh is here, nothing to fear, right? We here at Dolphin Markets are making sure to provide you with the best set of information, the best set of analysis, the best set of trading education that can help you, overcome to make your overall financial education, as well as in terms of helping you make money via hot stocks, right? So there is so much that we're trying to provide you. So please make sure to be a part of these streaming sessions and make the most out of it. Coming back to Nifty, as you can see, prices had gapped down. You can see there has been a gap over here. There was bullish sentiment, right? The prices had almost been bullish by almost 1%, 0.95 to a percent. That was based on the company's quarterly earning reports. Remember, 425 companies for this entire week. So some of the companies today, especially the IT sector and the finance sector, have done extraordinarily well, right? They were the reasons why prices were spearheading bullishness. These companies, these sectors were responsible for today's spearheading of bullish sentiment. But nonetheless, there was bearish sentiment based on the FIIs, right? And the DIIs. FII stands for foreign investment institutions, where they are currently parking out. They're taking out the money from the Indian economy and putting it to other economies where they are getting better returns, or they are putting it to safe havens, correct? So prices had opened bearish, right? They had gapped down. There was initially bullish sentiment, but as of now, the market has closed with a bearish sentiment, right? When prices were bullish, but at the end of the day, the bears were able to push down price, right? So there has been a correction of 1%, but then again a retracement of 0.6%, right? So a retracement of almost 60% for today's movement, all right? And similarly on the Sensex, right? So when we are looking at the Sensex, which basically is the smaller sibling of the what do you call, Sensex goes with Nifty, right? So Nifty is the bigger brother, and Sensex is Nifty is the biggest sibling. I don't want to get into gender inequality. Let us keep it basic, right? Elder sibling, younger sibling, correct? So Nifty is the elder sibling and Sensex is the younger sibling. Sophia is asking, how are you? I am good. I am energetic. I am good. Thank you for asking. I hope you are also good. All right. I hope you're doing well, and I hope you're making good money, right? Money, money, money. So similarly on Sensex, as you can see, prices had gapped down. There was bullish sentiment based on, again, like I had mentioned, the earnings, the quarterly earning reports, and now prices have still steamed, bearish. There has been bearish pressure, and the prices have closed right now. So as you can see, let me quickly give you a small brief as to how the markets have performed, what are the news that we have to be aware of, so on and so forth. All right, I hope you're ready. I hope none of you are sleeping, right? I want to keep it as interactive as possible, right? I'm going to share you a small article, and it's important for me to be aware and to make you aware of all the things that have happened once the market has closed, right? So I hope everyone can see my screen. Don't worry, I'm not going to make it very boring and monotonous, but we have to pick up certain pieces of information that are of vital importance for us. All right. So as you can see, the Indian benchmark has closed in negative territory, right? So the Nifty has closed with a deficit of how much? They haven't mentioned, it's, yeah, the deficit is 0.15%, right? 36 points. Still less significant, right? Because it had bullish sentiment once the day had started, but at the end of today's closure, market closure, the price is down by 0.15%. Similarly on Sensex, we are down by 0.17%. 22 out of 30 constituents, right? 30 out of the top 30 performing companies which are listed on the BSE, 22 of them have ended in red, right? We have companies like Mahindra, Sun Pharma, Larsen Toubro, Adani Ports. Some of these heavyweights have been in red, have been in the bullish territory for today. All right, but at the same time, we have the tech companies, the finance companies, the financial tech companies, right? We have TCS, we have HDFC Bank, we have Tech Mahindra, Bajaj Finance. They have been responsible for spearheading the bullish sentiment, right? At 4.95%, almost touching to 5, right? Among the broader industries, remember Nifty, we're talking about Sensex. So similarly, in Nifty, we have the main 50 companies, but also we have different cap. We have the small cap companies, we have the mid cap companies, we have Nifty 100 companies, the Nifty 200. So there is a huge diversification of different caps, right? Caps are basically different segregation of companies based on certain requirements, correct? So the IT stocks outperformed in an otherwise weak market, the Nifty IT, right? Even the Nifty has an IT, IT sector related cap market, right? Which ended higher by 2.38 and so on and so forth. So there has still been a lot of bearish sentiment, 22, all right? It is a pretty significant number, 22 out of 30 for the Sensex. So that just shows that there is still bearish sentiment, all right? And in terms of visuals, right, it's very important to understand this also. Overall, the sentiment, right, the market sentiment after the market has closed today, there is bearish sentiment. The bearish sentiment has been, higher than even yesterday. In terms of, it was around 45% as per what I remember yesterday, but today the bearish sentiment has taken off to 56%. People are either neutral, where they are indecisive, or they have a bearish outlook. The percentage of people having a bullish outlook, at least for the short term in the future, is shrinking. All right, it's at 8%. So the overall indication right now for the Nifty 50 is bearish sentiment. All right, while for bank and for the IT Nifty, it is neutral because they are performing well. But because of the big players in the Nifty 50 which are having bearish sentiment, they are getting nullified, right? So that is why it is neutral. I hope people are understanding. I hope you all are good. All right, that's good to know. Similarly, when looking at the FIIs and the DIs, we have discussed this and we will keep discussing it because these are the market players. And remember, today's technical education, right? Technical trading, technical analysis education will be comprising of these two terms, the FIIs and the DIIs. So please make sure to be attentive, right? Make sure you have your sip of coffee, right? Make sure that caffeine gets into your body to keep you alert, all right? So what we're talking about FIIs over here is FIIs, foreign investment institutions. Right now, as you can see, they have been retracting money from the Indian economy, right? They have been parking out their money, right? Taking it out from the Indian economy and putting it somewhere else. But in terms of, the value, it's around a deficit of 3978. While at the same time, when I have always mentioned it to you guys and girls, once the foreign investment institutions take out the money, it creates a void, it creates a space, a gap, right? It's like people using the public transport. Once a seat is vacant by a person, the seat is vacant. So another person can come and occupy that particular seat, correct? So similarly, when the FII vacates from from the economy by taking out some cash, by taking out some funds, liquidity, the DII, the domestic, the people within that particular country. We are talking about the Indian share market. So we are going to focus about the Indian companies, right? The Indian origin companies. They have the opportunity to utilize this time to enter the market, to create new positions, to broaden their portfolios, to expand their positions in the market because when prices are correcting, correct? As it's already mentioned previously, but quick, when prices are correcting, you're getting prices at a discount. So why wouldn't you want to get, when something was at 100 rupees and right now it's at 50, it's a bargain, correct? It's Black Friday, you are getting it at a better price. So that is the reason, as you can see, the domestic investment institutions have an appreciation of 5869. I hope everyone can see the value compared to the money by the foreign investors which they are withdrawing. It's 3978 deficit, negative, right? Compared it to the domestic. So you can see there is a lot of optimism based on the DIIs to make sure that yes, no problem even if the FIIs are withdrawing the funds, but we will make sure that we invest because we believe that the economy is strong, robust. Yes, there will be corrections, no doubt about it, but it is, the strong. What do you use? The term is, it's that strong intuition. Correct. The term is intuition. That belief from within that yes, we know the data, the financial data is strong of the Indian economy. It will correct itself and it will lead to greater heights. Correct. So I hope you have all understood and have got a gist or an understanding of what the markets were have concluded for today. How there was a bullish sentiment which started during the onset of the day when the market opened, but as and how during the mid time and the closure time there was bearishness because of the stocks of more than, remember, 425 companies segregated on a span of 5 working days, right? So a lot of uncertainty, a lot of skepticism, and with people, and including the geopolitical events, right, that are going on. So it is okay. Either people are neutral right now, having a neutral sentiment, or they have a bearish sentiment. Now let's talk about the main context of what we are, right? It's all about trading, technical analysis. So today's session is going to be mainly focused on advanced technical analysis. A lot of you beautiful people were asking that, Harsh, we are aware of the basics. We want something a little more on the advanced side. So I hope you all are ready because today's session is going to be focusing on the advanced technical concepts. All right. So let me open the PPT. I hope everyone can see the screen. All right. So as you can see, we are going to talk about advanced technical analysis. I hope everyone can see my screen. Let me see if I can open this as a PowerPoint. One second. All right, though it will cover up the entire screen, no problem. I hope everyone can see. It's wide and big enough for people to see my screen. So we are good to go. All right. So we are going to focus mainly on, as mentioned, the FIIs and the DIIs, right? Foreign investment institutions versus domestic investment institutions, all right? So a quick glance at what FIIs are. They're basically, for FIIs, they are investors who are investing in India, but they are not a part of India, right? They're coming from abroad. These investors are referred as FIIs. They can be mutual funds, insurance, businesses from any other country, correct? And it has the potential to contribute to the expansion of our economy. So the domestic economy can benefit from the foreign investors coming and investing in our country, right? Examples will be JP Morgan, we have Morgan Stanley. So you get the point, right? FIs are foreign, people from foreign, investors from foreign wanting to come and invest in our country, all right? While domestic, right? Domestic institutional investors are Indian investors, right? We are talking about the Indian share market, so we are going to keep it simple. Are Indian investors who want to profit by putting their money in the Indian stock market, right? Now, DIIs can put capital in insurance companies, mutual funds, liquid funds, so on and so forth. Some of the examples of DII: ICICI Prudential, Nippon, HDFC, right? These financial companies, and pretty much you must be aware that most of the financial service sector right now are performing well, right? Because they are the ones who are understanding, who are injecting the markets, right? Who understand that the prices have corrected themselves quite substantially, and now it could be a time to establish positions, right, in the index and the individual stocks, to make sure that yes, they believe that the prices will appreciate in the mid to long term, all right, time frame. Now, coming on to the next slide. So, FIIs versus DIIs. For everyone, anyone who is interested to know more about, the differences and all, can have a quick glance, all right, on the screen. Basic points like location, limitations on the amount of value, research teams, stock market holdings, so on and so forth, all right. So that has been a very basic understanding, all right, basic understanding definition of what is an FII and what is a DII. Sophia is writing, I don't know how to check the main force funds in the stock market. Don't worry, Sophia, that's what we're going to talk. And remember, this particular live webinar is going to be more about technical analysis, right? So we will resolve your query. Don't worry. When Harsh is here, there is nothing to fear, correct? So stop loss hunting, right? Now many people would be aware of this particular term, and the reason it's coming into the picture is because when funds are being injected into the economy, into the index and individual shares, and when the funds are being exploited away from the Indian economy, shares, indices, remember the market is a zero sum game. What comes in goes out, right? It's a valve, correct? Price, I mean, the fluids or the product or the services can only enter from one direction and exit through the next. There are no other openings, all right? So let me open the charts to make you understand. But before that, let's have a quick read of what is the stop loss hunting. So Sophia is writing, FIIs have been selling recently. That is correct, Sophia. FIIs have been selling recently because of the geopolitical uncertainty of what the world holds as a whole. So they are parking out the funds from the Indian economy as of now, and they have been putting it into safe havens or into other economies which have been giving better returns. All right. So how do you hunt? What is stop loss? Stop loss hunting is a type of trading strategy that aims to profit by deliberately triggering other traders' stop losses. All right. How to check? Sophia again writes, how to check if the main force funds have entered the market. One way to check how the main forces have entered the market was through the description that I'd shown, the drawing, the picture, right, of the FIIs and the DI. Whenever you see the percentage, right, remember these bigger forces, we will come to the charts. We will try to understand more from a technical perspective. Don't worry, Sophia. I know you're very eager to learn, and I'm more than happy to share you information which will benefit you. All right. So we are going to talk about stop loss hunting. The concept behind stop loss hunting is to take out a certain group of people, on the other side, so that they can be stopped out before the market decides. Remember, for prices to move, there has to be buyers and sellers. So there will be areas of interest where people expect prices to hold before they go in a particular direction. But since we live in a practical world, there are fluctuations, right? Fluctuations to take out people who put stop losses and stop them out and then continue in the desired direction. So the concept behind stop hunting is pretty simple. There are four general ways traders may attempt it. There are key technical areas: order flow, depth of market, sentiment, and news analysis. This is just a glimpse of the theory behind it. We will look at it onto the charts, all right? So as you can see, there is a simple depiction of what a manipulation or a stop hunt is, right? There is an area of 3904. I hope everyone can see my screen, correct? So there was an expectation that once prices comes to that level, people would want to buy that particular trade. But for some reason, price, it drifts. It goes deeper into the territory of that area and stops. Or many people who put entries generally put their stop losses because they are like, okay, I want to enter here, but I'm very skeptical about the markets. I do not know what the markets are going to do. So they put their stop losses very below it, just below it. So that gives the market makers, right, the FIIs and the DIs. Remember, these are financial institutions which have a lot of funds with them, right? So they are capable of stopping people. They are capable of short bursts of manipulation. They are capable of doing those activities. So here you can see the line, the blue color line indicates where prices we were entering, and then we had where prices had closed below it, indicating that yes, prices have been stopped out, and then the prices go back into the favor. Sunita Chaudhary is writing, what is a safe stop loss? It varies from person to person, but if you try to understand from, it depends from the person's point of view, from the person's psychological point of view, whether the person has a conservative approach or is aggressive in terms of its approach. So a conservative approach depends, people have different percentages. Some people would want to give a zone of maybe 5, 10, 15%. Some people give it more, some people want it more constricted. So everyone has a different persona, right? A person who's having a conservative approach will give it more space, and a person who is very aggressive will give a tight stop loss. So everyone has their own persona, all right? The main context behind a stop loss hunting is to take out people, take out parties on the opposite side so that they can generate liquidity, right? Liquidity is one of the major constituents in the financial markets. Liquidity is what provides buyers and sellers with the right set price, correct? So looking at certain examples, we are just having a quick glance onto the theory in terms of illustrations, then we will look at the charts also, right? Now, many people are aware of support and resistance, right? We talked a lot about it yesterday and even day before yesterday during our third live streaming session. So in a hypothetical scenario, we would generally have price respecting, right, the trend lines or the support or resistance line. But in a practical world, in the world we live in, nothing is hypothetical. You might have hypothetical scenarios maybe once or twice, but you will never have it consistently, correct? You're going to have a lot of deviations, diversions, because you are living in the practical world. Nothing is fixed, right? Everything is practical. Nothing is hypothetical. Everything is practical. We understand the examples from a hypothetical point of view, but when it comes to the practical world, you have to make some adjustments. As you can see, the blue color line on top, right? Hope everyone can see my screen. If you connect the dots, generally in a hypothetical scenario, the prices should have held price, right? At each and every point, the line is being tested, right, by price. But as you can see at number 4, right, there is a reason why price kind of manipulated. We call the term used for such scenarios is called as manipulation, when price gets manipulated by big institutions, eventually taking out a lot of people on the opposite side and then continuing back, right? Many people, right, some people don't use stop losses, some people use stop losses, each one to their own. But when it comes to such manipulations, remember, they cannot take out everyone from the market, correct? they want to take out a decent majority, if not more. So people would ask me, is manipulation happening on all charts at all time frames at every point? Not necessarily. There are favorable areas, which we can estimate, which we can speculate, where there is a chance for manipulation to take place. But whether will it happen, not happen, is completely not in our hands. All right. So as you can look at the line, the reason when once price created the number four pivot, it went out to close because people were so used or are so accustomed to using resistance and support lines. So they're like, all right, price reacted from pivot number one, price reacted from pivot number two, but the moment price came reacted again from pivot number three. So we should enter again, right? The more number of times a resistance holds, the stronger the probability. This is the general consensus of what people think. But the fourth time when people were ready to jump onto the bandwagon to take a shot, we are talking about technical analysis, right? So I hope people understand that in other markets, we cannot short in stocks, in indices, or real stocks and indices, but on other products such as gold, you have forex, you have even the US indices or CFDs, right? Certificate for difference. That is eventually what we're going to talk about, but that will be for the next session, which will be happening tomorrow. We are going to dwell more into what is forex, what are CFDs, how Dolphin will provide, would act as a service provider for you beautiful people to jump on our platform to check for yourselves the services that we provide. So that is the main context, but that will take place tomorrow on Thursday and Friday during the third live streaming session. All right, coming back to market manipulation, as you see, point number four, pivot number four, price gap closed up and closed. It created a manipulation. So a lot of traders who thought the price would be going down from pivot number four have been stopped out. Remember, as I said, if people want to enter at a particular level, they would generally put their stop losses right above it, right? Because they want to feel safe. They don't want to take unwanted pressure of handling losses. And that is the reason we have these stop outs where prices take out everyone on the opposite side and then go in the desired direction. Similarly, as per the support line, right? Now we talked about resistance. Let's talk about support. So again, pivot number one, price reacted. Pivot number two, price reacted. Pivot number three, price reacted. Again, people are like, now it will again hold. And it did for pivot number four. But look at pivot number five. It stopped out people. So people are like, the more times the support is holding, the stronger the support. But when manipulation takes place, this is what happens, right? People get stopped out before price eventually goes in that desired direction. So this is a very simple and clear depiction of what a market manipulation, what a stop loss hunt looks like. All right. What is market manipulation? Market manipulation is an attempt to artificially increase or decrease the price of security. It is artificial because the manipulator is attempting to skew public and to skew supply and demand to push price in a favorable direction for them. People, it's very important to understand that since the market is a zero sum game, right? Whatever enters the market has to exit the market. If someone is making money, someone is losing money, right? So market manipulation, we also call them as market makers, right? Every big bank institution has a team of market makers. They are responsible for skewing the market. Skewing means distorting, right? It's not since it's a practical world that distort price. The prices might be going, for example, bullish, but they will distort the picture by showing it going bearish before it goes bullish to create uncertainty, right, as to what will happen and all. That is the overall meaning of market manipulation. All right. So as you can see from this example, we have we have a resistance. All right. So we have drawn a resistance. Price came and reacted from a resistance. So the next time price comes to the same resistance, based on people who have information, who have the information or the education of technical analysis, will assume that price, whenever it comes back to a strong level of resistance, prices will hold, right? And as you can see, price does hold. But as you can read, the sellers place their short orders here. Exactly, right? So that is what I'm trying to explain. Once price comes back to a strong resistance level, as in this example, once it comes back to a strong resistance, people expect, people as in the general consensus, all right, the majority of traders who have this knowledge of support and resistance would start putting their shorts, all right, over here, but only to get stopped out. All right. So market makers are aware about this, right? Big banks, big institutions will hire the best brains, right? Who have PhDs in analytics, in mathematics, in physics, in financial modeling, so on and so forth. So people who follow technical analysis based on their understanding of support and resistance would enter to take shots around this area. I hope everyone can see my mouse. But unfortunately, price goes and stops them out. So sellers close positions in less. Buyers start buying. Now again, so now people are like, okay, this resistance has been taken out. Now the prices will be more bullish. So people then they what do you call it? They go through their education, they go through their trading notes, and they're like, okay, now a resistance is taken out and it's become a support. So now everyone who had tried to short have got stopped out, and now they will take a long because now they think it is a breakout trade, correct? So people would be like, all right, let's go long because price has taken out a resistance, and that is when the price is reverse again. All right. So this is a clear depiction of market manipulation, right? People follow technical analysis, right? Whatever they have understood in terms of basic level to mid-term level technical analysis, right? So people expected the price to hold at a very strong resistance level. Price initially starts to hold that level, but only to get stopped out, right? By prices closing above the resistance level. Now people who got stopped out are very impatient. They want to make back the losses. So what they do is they put the next concept in their mind where they understand and they are aware about when a resistance is taken out by price closing above, it turns into a support, right? Even we have discussed about it. But the markets are practical, right? We don't live in a hypothetical scenario. So people who thought prices have closed above expect or have their opinions that now prices will continue up because it's a breakout trade, but only again to get stopped out because price reverses again. So these areas, and remember, market manipulation cannot happen at every stock, at every share, or at every index all the time, right? They cannot just keep manipulating every now and then. They will manipulate at certain areas where they feel a large consensus of traders have opinionated their decision to go long or short, right? So the more majority they can stop out, the more liquidity they can acquire, correct? So this is a very good example of what a market manipulation is. I hope everyone is understanding. If you have any questions, if you have any queries, please comment down below. Let me know. Are you able to understand? Are you not able to understand? Do you think it is easy for you to understand, or is it difficult? Anything. Or if you just want to say a hi, good evening, thank you for talking, you can even write that down in the comment section. All right. Now coming back to the next example. All right, so this was the example that we talked. Price comes to a resistance, price closes above, indicating that people who were shorting have got stopped out, and now people have jumped onto it because they consider it to be a reversal, a resistance turning into a support. So all the breakout traders join onto the bandwagon to go along only to get stopped out. So people are getting slaughtered from all the sides, right? People are getting killed. This is how the market functions. The market is a zero sum game. What comes in goes out. There is no other. Uh, there's no other method of coming out, right? It's a valve. What comes in goes out. The direction is unilateral. There is no other exits or entries. Looking at the next example, as you can see, again, a significant amount of resistance, right? So prices have been holding and supporting only for a breakout, right? Now prices closes above for people who were wanting to short. Now they have been stopped out. Now they want to make the money back. So now they go long because it's a breakout trade, right? As you can read over here. Only for them to again get stopped out because the prices start to reverse. And here they're like, all right, bearish breakout, and the price continues down. All right. This is a very clear example of what a market manipulation is, right? Now, key points to understand in trading. It is very important and very, 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 useful data in terms of what are the key points to remember in trading. Trading runs on market terminology, unique traits of market, and factors influencing. So it's not just only technical analysis can be the best solution to trading, or fundamental analysis can be the best solution. You have to have a culmination of everything, right? So Little Chaudhary is writing how to prevent market manipulation losses. Uh, there is no way that you can completely prevent market manipulation, but a conservative approach to prevent market manipulation is by giving bigger stop losses. So if a person is using a stop loss and can give bigger stop loss area, the chances for market manipulation reduces, right? So if you increase the area of stop losses, less chances of being stopped out, right? Coming back to the charts, how to see. So the key points to remember, this is not the point we are talking. There are many sub points. Key points to remember. It's not just one aspect of trading. We have to connect all the dots: technical, fundamental, articles, news events, blogs, anything that has weightage in the financial markets in terms of providing information. The more dots are connected, the better. Correct. Then we have how you determine the markets. Like I said about fundamental analysis, technical analysis, combine the best of two, right? And assess your risk appetite. Very important because many people don't understand this particular concept. The risk percentage, right? Some people like to be on the conservative side where they're like, okay, I want to make little and I'm happy. Some people are like, I don't want little, I want more. All right. So depending upon the risk appetite, one can decide whether to go for a low risk appetite, medium risk appetite, or a high risk appetite, right? And then even understanding your risk to reward. Risk to reward is so important in today's world, especially when it comes to trading in terms of technical trading. Risk to reward, how much you are risking to make, and how much are you being rewarded on that risk. The bigger the risk to reward, remember, risk to reward is a ratio. How much I am willing to risk and how much I'm willing to be rewarded for that risk, right? So if I'm risking, for example, $1 in this particular example, as you can see, if I'm risking $100 to make $100, I'm making a risk to reward of 1:1, which is very basic, right? Like I'm risking one, but I'm also making one, which is not, which does not sound good, which does not sound, profitable. But if you're looking at a risk to reward of 1:3, if I'm risking $100 to make $300, so I'm getting three times the money for what I'm risking. So the more the risk to reward, the more the ratio of the risk to reward, the better, right? The more successful you can become. Make sure, because many people they jump into the financial markets right now. We at Dolphin Markets are making sure to provide you these hot stocks by a thorough analysis done by our team members, right? Our team of analysts and researchers. But once you start trading, and once you start putting your own head into understanding how things are working, why are things working in a particular fashion, that is when it's important to have a trade plan to make sure you review, analyze, and where's your entry, where's your risk parameter, where you want to close your trades, and how much you want to make in terms of placing your targets, correct? And emotions, right? I mean, who doesn't have emotions when people are staring at the chart? I mean, I have colleagues, right, from the past, who have been in the markets for more than 50 years, right? But even till today, they still have emotions, when they trade. It is very hard or almost impossible. Even me, when we trade, when we analyze, we will have a certain degree of emotions, all right? So it's very important to understand this particular concept, all right? You cannot say you can be emotionless, but you can reduce your emotions, right? Now let's quickly look at the charts to see and give you some examples as to what we have talked about in terms of market manipulation. Let's open maybe a stock, any stock that is coming to your mind. We can talk about TCS, right? So TCS, we're talking from a technical analysis point of view, right? A clear example could be, let's see, okay, let me scout the markets to see and give you a nice example. For example, over here, prices have been creating this kind of support area, right? This one. And as you can see, for people who would have put a line and would be like, no, this is the area where prices are holding. Next time when prices come, prices should hold. But again, the markets will do what they have to do. Price creates the manipulation, right? With such a manipulation, people were right in the direction, but people get stopped out before price goes in. So such structures on the candles where there are wicks and then prices get stopped out, they are called as manipulations, right? Certain examples like these ones. And we talked about how people get stopped out and then, but let me, oh, Sophia is writing, people are emotional and so is the stock market. Yes, people are emotional, right? Who is not emotional, Sophia? Everyone is emotional. It is inevitable that the stock market will be influenced by uh, the stock market will be influenced by emotion. That is correct. The stock market is basically a graphical representation of the emotions being displayed by investors, traders, right? The more green, the more greed in terms of, yes, we are making money. The more red, the more fear in terms of we are losing money, correct? Because we are talking about the Indian share market, right? Or we are not talking about any other product as of now. The other products, when we come to forex, commodities, indices of other markets, or and CFDs, right? CFDs are the current hot products being sold outside beyond forex. We will be covering those in the later 2 days, right? Thursday and Friday, right? So today we're going to focus mainly on the share market to understand. Remember, because in the share market, people are buying shares, people are buying stocks. So people, when the market goes down, people cannot, they can square off their positions which were previously opened before, but they cannot take shots, all right? We are not talking about futures and we are not talking about options. We are talking about pure share market, all right? So when prices are correcting themselves, the only two major emotions that are displayed in the stock market or displayed in any financial market are only this, which are uh, greed and fear. The market is completely governed by these two set of emotions. I hope everyone can see it. Let me use an emoticon. All right, greed and fear. I hope everyone can see it, right? Okay, my bad. Let me show you the chart. Sorry, my bad. I was on the PPT. I hope everyone can see my screen right now. Yeah. So this is what, a typical depiction of price of emotions, right? The stock market shows. We have greed and we have fear. Greed is when prices are appreciating in value, right? The more prices appreciate, the people who have bought it feel more happy, feel good, because the prices, the market is appreciating, the value of the stock is appreciating in value, so people are making money, right? But conversely or inversely, when the prices are correcting or reversing, it instills fear, right? It's only greed and fear that dictate the entire market when it comes to understand from an emotional point of view, right? Only two factors, greed and fear. There is no other third emotion that is used. You can have various intensities, right? Greed can be happiness, greed can be aesthetic, greed can be egoistic, fear is going to be scared, panicked, running for your life. So there are different intensities of greed and fear. But the market is only governed by these two governing factors. All right. It's very important to understand, and please understand, when you people might come back to us and be like, yes, that is the reason we are not sure about how do we, look, or how do we analyze the markets. Remember, we want to keep it structured and, segregated from each consecutive day as we progress. Remember, the live trading sessions happen every day from Monday till Friday, three times a day, once in the morning, second during the afternoon once the market is almost about to close, and third like the one happening right now where the market is closed, and we talk more about from the educational point of view, right? People are like, but Harsh, we love the way you talk, we love everything, but we are still, not feeling safe to enter the market. That is the reason we are here. We are here providing you with hot stocks, providing you with trading opportunities when the market is open, right? The first two live trading sessions that happen are mainly focused not just on analysis, but mainly on providing you with the power that our trading strategy works, right? Let me show you quickly, and it is very important to emphasize on this particular topic because these trade hot stocks have been given since last month, right? Almost we have a culmination, a total culmination of around 25, and we have couple of trades running, right? So when you get a profit rate of around 92, right now it's around 97. I hope everyone can see the mouse, right? So a percentage of 92. Remember, we position size between 10 to 15% per trade, right? Looking at the size and looking at the way the stocks are performing, this is exactly what you need, right? You need a helping hand. We are the ones who are providing you the helping hand in terms of giving you these hot stocks, these trading opportunities where you can make money, correct? So for people who are skeptical about it, please have a strong look at this Excel sheet. It gives you a very clear depiction of the power of the financial markets that we are providing to you on a platter. All right. I hope people are understanding. People are not sleeping. People are aware. People are lively, and they are able to grasp some information. Remember, the last 2 days when we were talking during the third live streaming session has been more towards the basic and the middle level, the mediocre trading strategy. Today has been more focused on the market manipulation. How to avoid market manipulation. What are FIIs and DIIs? How they dictate price action. Maybe in the coming days, as and how more people start to join, we might start to dwell more deeper into the technical analysis aspect in terms of maybe supply demand, in terms of trend analysis, in terms of harmonic progressions, in terms of using Fibonacci ratios. There are so many topics to cover, right? So please be sure to keep attending these live streaming sessions. These live streaming sessions are only for you, for your betterment. So make sure to keep attending these trading sessions every day, consistently, right? Be like Sophia. She's always in the group. She's always messaging. She's always interacting, all right? Learn from her. She's the one who's made almost around 10 to 20%, right? From these trades, like from last week onwards. So she is doing very well. So please be like her. If you have any other questions, or you feel that I have missed out on some particular question that I was not able to answer, or is there any other query? There was one query that I had come across from one of you beautiful people, and that was Harsh. For example, if we have a hot stock running, all right, now during the market timings or till the time I'm providing you with the live streaming sessions, if any changes in the hot stock happen, I will definitely let you know, or my team of assistants will let you know. But if you're like, Harsh, but what if you are not around? Don't worry. When Harsh is here, there is nothing to fear, right? My team of assistants will take care of it, right? They will notify you, they will remind you when price is approaching the 5% target, or when price is approaching target one. So you do not have to take any kind of tension. You do not have to take any kind of pressure, right? Even if I'm not there, or if I'm busy in some other work, or if I'm not, in front of the chart, my team of assistants will make sure to notify you when to close the trade, when it is approaching the 5% target, or if you have any query in terms of how to place a trade, how to position size, don't worry, everything will be provided to you, right? I hope everyone is understanding. I hope everyone is having a good time. I hope people are learning, right? Remember, today's trading advanced. Remember, the more advanced the technicals get, the more brain power it requires, right? Today was a basic of the advanced level. What the definitions, the mindset, the psychology that is required, because ultimately trading depends more on how well you can handle psychology, right? They're going to have good days, they're going to have bad days, but eventually, how you can keep yourself settled and make sure to lose our opportunities to make money. Look at this, for people who would be following us, by the book, hypothetically, each and every trade they were following by placing and letting the trade do what it has to do, people would be sitting at a 92 percentile, right? Profitability. Let me repeat that: 92 percentile profitability. That is insane in a matter of less than a month. So please, ladies and gentlemen, make sure that you utilize this time, utilize the first two live streaming sessions. Mainly they are used for hot stocks for you, so that we can provide you with valuable information. We can provide with value so that you can make money on those stocks. All right. Tomorrow's day again, remember, the market has had a bearish sentiment, so we do expect the market tomorrow again to open up with a bearish sentiment. But nonetheless, we will get back and we will analyze again the first two streaming sessions, especially the first, right? Since it's the beginning of a new day, with a lot of sentiment that it has accumulated from the previous day, how the markets get affected, what are the current news events taking place. So don't worry about anything. I will be your guiding. I would be your mentor, right? I will guide you through all the steps. Whenever a hot stock comes across by my team of researchers and analysts, I will make sure to let you know immediately, right? Even though if I might be discussing about some important topic or talking to you about an important article, but if I come across a hot stock, don't worry, you will be notified in less than 2 minutes, right? Less than 2 minutes. Imagine, like, we want to be instant, right? Getting the right set of opportunities and jumping onto the stocks. Why? To make money, correct? I hope everyone is alive and kicking, right? I don't want people to fall asleep, right? And we are almost done with today's third live streaming session. Remember, talking every day, 3 times a day. Remember, each session lasts for about an hour and a half, almost. All right, approximately. So it does, make sure to drink water to keep your vocal cords as well as your system, hydrated. Make sure, more than a mentor, I'm more of a health specialist over here. So please make sure to keep your fluids. Mr. Lee, again with his emoticons. I hope I understand it one day, or I might have to meet him once to understand what it really is. All right. So until next time, I hope everyone has had a great, great evening. We still have the night remaining. I hope you can go out, have a good time with your friends, family members, girlfriends, boyfriends, husbands, spouses, children, grandchildren. I hope you all have a great evening. All right, I will see you tomorrow again, for tomorrow being Thursday. I will see you again on Thursday, right, for the first live streaming session. Until next time, all right, take care. Ma salama. See you. Bye.